It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I've got a kind of a juicy one for you today. There's some new data that's come out, which has been pulled from various sources, that suggests that over the course of the next maybe 2 years, maybe even 18 months, we might see as many as 2 million short-term rentals come on the market for sale. There's evidence that shows an oncoming wave of inventory that people are going to have to figure out what to do with because they're no longer performing at the rate that they were when they first bought their investment property. And so, you know, for those of you that are listening, I've been selling real estate for 20 years. We've done about 1,500 transactions to the tune of about $1 billion worth of real estate here locally. I've had this show for 13 years, and I share with you guys my perception of the market, right? Where we're headed. I try to inform you as consumers and educate you on the real estate process. So when it comes time for you to buy a home or sell a home or invest in real estate, you know the right questions to ask, and you're truly educated enough in the process to not get taken advantage of or have the wool pulled over your eyes by somebody that probably you shouldn't be working with. And there's a lot of agents that are struggling. I think there was a stat that came out that said that last year, over 70% of real estate agents with licenses did not sell a home. Last year was a tough year for a lot of folks. But what I want to talk about today is the information that's been pulled to justify what I think is a fairly bold claim in this amount of property that's going to hit the market. And we have a lot of short-term rentals. And frankly, we've seen a lot of issues in our own market with short-term rentals over the course of the past, 2 years. So I want to dive into this. Now, if you own maybe you're an opportunistic investor, right? You're not really in love with how volatile the real estate or the stock market is right now. You want to park your money in something more safe like real estate. Or maybe you already have a portfolio of rental properties or a rental property, and you're just trying to protect what you've built. You're trying to protect your cash flow, or you're trying to protect your retirement assets. There are several factors that substantiate this claim. And so these are the facts. This is the data. These are the reasons why I and many others think you need to know this information now. And so, we have several areas in Charleston that are well known for short-term rentals: Folly Beach, Isle of Palms, areas of downtown Charleston in the short-term overlay district, Park Circle, and then spread out everywhere in between. And it's really a craze that got started probably around 2020, 2021, right in line with when interest rates were incredibly low. And so you could buy this property, make way more on it than you would if it were just a typical rental property, right, where you stuck a tenant in there one after another, year after year. The returns were a lot juicier. So a lot of people pushed into this category of investment, and as a result, it flooded the market. So here are some of the facts. Number one, occupancy rates are down to about 48%. Just a year or two ago, they were at 61%. So not as many people staying in Airbnbs. I think part of that has to do with the fact that when COVID hit and a lot of people basically learned that, like, hey, I can live anywhere and I can work from home now. Wow, that's amazing. I'm going to move to Charleston, South Carolina. And a bunch of people did. But then you have a lot of people that are like, because of this Airbnb craze, it afforded them the opportunity to maybe visit some other areas of the country and have kind of a unique experience, right? Rather than just staying in a hotel. So a lot of folks got to kind of test drive an area before moving there, which was an interesting way of doing it as opposed to just staying in a hotel and driving around. They really got a sense for the community. That being said, again, occupancy rates are now down below 50%. They were at 61%, not the height. They were at like 75%. The second major reason why this is a very shaky investment class right now is because operational costs have skyrocketed, right? You've got property insurance that's gone up 34% since 2023. I mean, I own a property that's a short-term rental in downtown Charleston in the overlay district, and my property insurance about 2 years ago more than doubled. And it's not a small number. I mean, it's a big number because it's a big property. You also have things like maintenance costs going up, cleaning services going up, even management fees that companies are charging are going up. They're all up. On top of that, reason number 3 is that you have all these new local regulations that are killing profit margins. I mean, like what just happened in North Charleston. They basically just said, hey, among the 10 districts that we have, we are going to issue 60 permits per district. Well, 2 of those districts basically occupy Park Circle, meaning you can only have 120 total permits. Well, in just one district in Park Circle, there's already 220. And the thing that is incredibly challenging is when you go to sell that property, regardless of how creative you want to be in selling it, like there was a point in time where you could take the property and you could put it into an LLC. The LLC owns the business. The LLC is what is permitted to operate as that property is a short-term rental. Their business license is in their LLC. And all you would do is sell the ownership of the LLC consistent with the value of the property, and the LLC would still own it. There's a change in the ownership of the LLC, not a change in the way in which the LLC owned the property. Well, even something that creative, according to North Charleston, says, hey, sorry, but if the property is sold in any way, shape, or form, a transfer of ownership occurs, even though you're permitted and you're grandfathered in, as soon as you sell that property, you got to go get in the back of the line. And it's a long waiting list. If in the past 18 months, get this, 342, thereabout, cities and counties across the country have implemented new restrictions on short-term rentals, either by putting a cap on the number of properties that are allowed, or imposing strict occupancy limits, or mandatory safety upgrades, or special tax designations, or just doing away with them altogether. So that's the third thing going on, and we're experiencing that. Folly Beach experienced that a while ago. North Charleston's going through it right now, and it's going to change that market. Absolutely, not a doubt in my mind. Number 4 is that we have just unprecedented market saturation for short-term rentals. We've got a 24% increase in short-term rental listings just year over year across the board, even as demand has decreased by 12%. You can kind of guess what happens next. That leads to lower prices and shrinking profit margins if you're the owner of that property. So the question is, how long can you weather that storm before you have that honest conversation with yourself about whether this is still a top performing asset for you and you should keep it, or if you should cash out and do something else with the money? And that brings me to point number 5, which is probably the biggest of them all, which is that a lot of these properties that were purchased over the course of the past several years to take advantage of those really low interest rates had some sort of risky adjustable rate component to that mortgage, right? And so you have to think about it this way. In 2021, almost 30% of all properties that were purchased by investors, and about 37% of those were intended to be used as short-term rentals. So you had a lot of investors that were basically just going into acquisition mode, right, where the interest rates were at the high 2s and the low 3s, which means that they were doing things like doing a cash-out refinance on an existing property to use it as a down payment to purchase the investment property. Or they were cross-collateralizing multiple properties, or they were doing interest-only loans with balloon payments. A lot of them were doing private lending for 3 to 5 years. Some were taking out home equity lines of credit, which are used for down payments. People were using DSCR loans, which is debt service coverage ratio loans, meaning you personally as an individual don't necessarily need to qualify and prove that you make enough money and have a small enough amount of debt to be able to afford the payments. What they would do is they would underwrite that purchase based on the income projections of that property. It was essentially a different paint job on no documentation, stated income, stated asset loans, which is what caused the crash of 2008. And so what happens is all these, properties had maybe, 3 to 5 year adjustable rate mortgages, and they're now going from purchasing the property at a 3% interest rate to it now being refinanced at a 6.5%, 7% interest rate, maybe even more, depending upon their credit. And their payments are going to more than double. So there's about $318 billion in loans on these properties that are either going to adjust or require refinancing by the end of this year. That's the seriousness of the situation. And it's, I don't do stuff like this on the radio very, very often, but this is something that I've talked about before. It's something that I think we need to keep an incredibly close eye on. And we're already starting to see markets get impacted by things like what just happened in Park Circle. And the reality is this, and we're going to take a break and talk more about this, but if you remove someone's ability to do a short-term rental on a property, or the property to be used for that purpose at the point in time you buy it, then obviously you're going to have a lower profit margin. The only reason people do short-term rentals is because they can make more money than they could if they just stuck a tenant in there for a year. So what's going to happen now is this, like in Park Circle as an example, if you go and you buy one of those properties, you have to then wait in line to get your permit, which could be years, which means you have to analyze that opportunity as if it is a long-term renter. And those returns are not going to be as attractive because in the grand scheme of things, prices are still really high. Affordability is, we've struggled with it for years at this point. So there's a storm a-brewing, and I want you guys to be aware of that. I want you to see what some of the signs are and how to watch out for that. So stick around. We have a lot more to discuss on this topic right here on the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA and WTMA.com. And remember, if you want to reach out to me, if you have some questions, maybe you own a property that you want to have us just do an analysis for you on. We have several people that we talk to on a monthly basis where we basically do a portfolio analysis for them. And we can talk more about what that entails. There's no cost to it. It's just an opportunity for us to help you understand really what you have and the opportunity or the opportunity cost of continuing to own those properties. So if you want to reach out to us for information like that, or of course you're just thinking of buying or selling a home, we sell real estate Monday to Sunday. My number, 843-800-0065, 843-800-0065, or check us out online, listingsincharleston.com. We're talking about some information that's really just been put together from various sources, leading us to believe that there is more than likely going to be a significant number of short-term rentals that come on the market very soon. And of course, that's going to impact everything because it's not like you get to separate investment properties or properties that are used as rentals from properties that people live in when you're running something like a comp. A house is worth what it's worth. It's just worth different things to different people depending upon how they're going to use it. So that's what we're talking about today. Is just this, in my mind, significant structural change that's going to occur in our market, and it is going to impact our market locally because we have a lot of short-term rentals, a lot of legal and illegal short-term rentals, and that's why some of these municipalities are cracking down so much. But the signs are already starting to show up. I mean, if you look at new short-term rental listings, they're down 7% quarter over quarter. Conversions from short-term rentals to long-term rentals are up almost 20% in the past 6 months. So people are already starting to get it. They're already starting to see after several seasons of disappointing returns that, hey, maybe we need to start thinking about using this property in a different way. Maybe it's a monthly rental. Maybe it's a corporate rental. There are more options that are out there for you. But I think what's happening is this is leading to more conversations between investors and realtors about off-market sales, right? They want to try and sell the property if somebody is looking for something like that, and they want to do it kind of quietly behind the scenes. Part of that, too, is that if it's for sale, they have to toggle back and forth as to whether they continue to rent the property or if they hit the pause button at some point so someone can buy it. So it's a bit of a tricky thing to time. Most folks want that rental income, and so they say, hey, if you have a buyer looking for something like this, and they make an offer, then at that point in time, we'll stop the rentals so that they can buy it. And it's going to depend on where it is, again, because some of these areas are not going to let you just assume ownership of the property and continue to do a short-term rental. They're going to make you wait and reissue a permit based on how long that waiting list is. And in some cases, it's like years. So we're having more and more folks kind of realize that, hey, the return on my investment, or at least what I thought I was going to be making on this short-term rental, is just not pumping out the numbers that we need in order for this to be a worthwhile investment for us moving forward. We can do better things with the equity that we have in that property to make our money more money. That's really the thought process and the conversation that we're starting to have with folks. And so if you look at some of these different areas, I mean, it's already starting to happen. If you look at Myrtle Beach as an example, 38% of the total inventory of homes available are short-term rentals. And their average days on market just jumped from 41 to 97. So that market is changing. You can look at Gatlinburg, which is an incredibly popular area for short-term rentals. I've rented several there. It's a huge STR market. 44% of their current housing stock are short-term rentals, and vacancy rates have more than doubled in the past year. Or you can look at Asheville. A new local tax just added about $4,200 on average in expenses to people that operate their property as a short-term rental. Or you can look at downtown Nashville, where 41% of everything available right now is also a short-term rental. So what's interesting is you look at some of these markets like Austin and Scottsdale and those areas that I just mentioned. A few years ago, they were all over the news for being this hot new area that everybody's moving to, right? Those are the hot markets. We're among them. And I know because, again, I sell real estate for a living, and we do pretty well with it. We've done about 1,500 transactions. So we're pretty connected with the investor market. I'm an investor. I think I've told you guys this multiple times, but I own investment real estate. I flip property. I'm a private money lender. In addition to, of course, helping other investors, whether it's acquiring or divesting or flipping or helping them manage their property through our property management company. So I think that with and to just maybe tie this up into a bow and move on, if you look at the refinancing schedules and you look at the seasonal performance indicators and you look at operating cost trajectories, there's basically going to be three phases that will occur over the course of the next 2 or so years as the market starts to enter into this, what I'm kind of calling a structural shift. And so phase one is going to be now through probably the end of the summer, right? These are people that are highly leveraged investors. They've got adjustable rate mortgages or balloon payments that are coming due. These are going to be homes that are in like secondary vacation destinations, urban markets where there's just not as much demand as there once was. And based on the research, they're saying that this is going to impact somewhere between 400 and 600,000 properties nationwide. So that's going to happen over the course of the next, 90, 120 days. Then you've got phase two, which is going to be the majority of people, right? It's going to be this fall. It's going to be next spring, bleed into summer, more than likely. But these are going to be the fixed rate borrowers that they've depleted their reserves, right? They've had multiple disappointing rental seasons. The property's just not pumping out the income that they need, and they're barely breaking even. These are people that are facing like insurance renewals or non-renewals because insurance companies will just ditch you. And they've been pretty famous for that over the course of the past 2 years, especially in coastal markets. I mean, we've got a bunch of insurance companies that don't even operate here. So you've got these big increases that are obviously going to impact their bottom line on top of lower demand, more people trying to find short-term rentals because there are tons of them online. It's a saturated market. That's not necessarily a dying breed, but it's almost kind of like people are been there, done that. Maybe this time I'm just going to go to a hotel so I don't have to deal with it. I don't know. I think there are some people in that camp, but this is going to be people that are also impacted by local regulations, like in Park Circle, like folks that were on Folly Beach or are on Folly Beach, and multiple different pockets within Charleston where either demand has gone down or regulations have put a limit cap on the number of properties that can be used as STRs. And so the question is, if someone's going to, there's no continuation of that market, right? if there's this huge cap and people have to then wait 2 to 3 years before they can use it as a short-term rental, you're asking a lot of that investor. There's a lot of trust that needs to go into believing that property is going to be able to pump out those same numbers now 2 to 3 years down the road. And a lot can change in that time frame. This is probably going to impact somewhere between 800,000 and 1.2 million properties. And it's going to be primarily vacation markets, high growth cities. I mean, we fall into this category for sure. And then phase 3 is just going to be the people that they were formerly profitable with their short-term rental, but they've now accepted kind of the structural market shift. These are also going to be like corporate owners that own multiple short-term rentals and investment properties that they acquired when borrowing the money was next to free at 2.5%, 3%. They're gonna strip away the assets that are not top performing assets, and they're going to do something else with the equity they've built over the past several years. That just makes sense. You can see that happening, and that's going to add to inventory in the regular housing market. That's the whole point, is that this is going to impact everybody. And this last phase, probably summer of next year to summer of 2027, that's going to be 300 to 500,000 properties is what the research is saying. And frankly, I believe it. Now, there's a lot of work that went into putting all of this information together. I'm not one of those agents that believes in like scare tactics to get clicks and subscriptions because, for those of you that listen to the radio show, I also video myself while I'm talking. And then we put those videos on like YouTube and Instagram and TikTok and all over the place. And then we take that audio and we put it into podcast form. So you can listen to us really wherever you want, however you want. But the impact that this structural shift is going to have on the overall market, I think is going to be fairly significant, because you have to make the decision as the investor with an ill-performing asset. You have to determine whether you're going to keep it, sell it, or you're going to convert it to something like a long-term rental or a corporate rental, and the returns there just aren't as good. So if you're already struggling and you're facing an increase in payments and, taxes go up every year, everything's going up, you're left with a property that could be $600,000, $700,000, $800,000, $1 million that's just not pumping out any income. At the end of the day, when you really look at your net income, there's not much to show for it, maybe a few $1,000s in some instances. So the math just doesn't work for a lot of these folks on some of these properties, or at least it won't if the market continues in this direction. So I think you're going to have a lot of folks that own these types of properties that are like, you know what, we had a good run. We made a bunch of money in the form of equity. We made some great rental income for a while, but we can see the downward trend. Let's go ahead and sell this thing while the market's still good and before all these other folks put their property on the market. I think that's, we've already seen that. We've already worked with clients that have made that decision. And so if this is something that you'd like for us to talk with you about personally, you own an investment property and you want to look at, does my investment into this specific property make sense, or could I take what I have and transfer it to something else that's going to make me more money? All right, that's what we're talking about when we discuss things like a portfolio analysis. So if I can help you in any way, shape, or form, right, buying, selling, investing, managing, happy to help. Just give me a buzz or shoot me a text. 843-800-0065 is the number. 843-800-0065. Or check us out online, listingsincharleston.com. That's listingsincharleston.com. I always like to take a moment and just tell you that I appreciate those of you that listen to this show. I really do. It's been so nice for me over the course of the past, I think, 13 years to just come in here week in, week out, help you guys understand what's happening in the real estate market, how that impacts us here locally. And it's been incredible to watch our market change in the 20 years that I've been selling real estate here. And I think we're due for some more changes here in the next little bit with what I just talked about, with the issues with short-term rentals and just everything that went. I don't want to go through the entirety of that segment again, but I think we've got some challenges ahead of us. We've also got all these issues with tariffs and how confused everybody is right now at the state of the economy. And yes, of course, we're recouping a bunch of money from waste and fraud and the government, and that's all well and good, but people haven't really seen much in the form of relief yet. And so you've got these tariffs that are going to impact things for at least the short term. One is that, contractors are already anticipating building materials being more expensive. So they're charging more. Somebody forwarded this to me. It wasn't somebody that I directly communicated with, but the contractor had a line item on their quote for a 20% fee on the cost of materials for tariffs. And there's a bunch of research out there that says that, look, the tariffs as of right now are costing builders about an extra $10,000 per home to build. And so, yeah, it's shaking things up. I think it's just a shaky time right now. We've had so much change. And before that, I mean, if you think about September to December of last year, it was really hard, frankly, to have conversations with folks where they knew exactly what they wanted to do and when they wanted to do it, because so much hinged on the election and the trajectory of our country. And so we've got a lot of just mixed signals in the market right now. We've had some financial reports that have come out that don't look so hot. And on top of that, when we look at something like international buyers, the top 3 countries that buy real estate in the U.S. in order is number 1, Canada, number 2, China, and number 3, Mexico. We're having a bit of a tough time with them right now. And, so many of them move to places like Florida, and they'll do something like, they'll buy a condo. But the problem is, in the condo market, so many of them are older and have special assessments and regimes or HOAs that don't have enough money to fix the issues, that they can't finance the purchase. So you've got these condos that are staying on the market for longer. We're seeing it in Myrtle Beach as well. I shared some stats with you on that. And obviously what happens is that an increased supply of homes means lower profit margins for builders if prices start to depress, less negotiability for sellers, better deals for buyers. At some point in time, the pendulum is going to swing from sellers to buyers, right? That's just the way markets work. They're cyclical. And I've seen the entirety of a cycle. I've been selling real estate since 2006. And so I've seen our market change over the years. And that's why I'm sharing with you the information I did about short-term rentals, because I believe that's going to have an impact on our market in certain pockets. But what happens with those short-term rentals will impact the real estate that surrounds it. So just because you don't own a short-term rental doesn't mean your property won't be impacted by what's going to happen if these properties hit the market, because they're just no longer a asset that performs well for the owner. And so all I can say is that the people that are serious about moving, the folks that are ready to sell, the people that are ready to buy, the market is in a very interesting place in that sellers, you can still get a great deal when you sell your house. And if you position it correctly and you work with somebody that really understands, I'm talking really understands pricing, because it's such an important component right now. If you're working with real estate agents and they're pulling up a list of everything that's sold in your neighborhood and looking at the average price per square foot and says your home's above average and we should price it here, run is all I can tell you. I mean, it's just not how you price a property to sell, not in a competitive market. Now, when the market was gangbusters in 2020, 2021, and people were doing outlandish things to buy property, like just, hey, you go and you take a FaceTime video of it, we'll take a look at it. If we like it, we'll buy it. That was happening all the time. I was basically forced into creating a virtual home buying program for my real estate company because that was a sign of the times. Obviously, things have changed now, but when you look at pricing, there's a specific way of doing it in my mind. It's how appraisers do it. There's an actual process to assigning value or adding or removing value from your home in comparison to the ones that have recently sold, right? And we're not pulling the 3,000 square foot house that just sold that's on the water if you're 1,500 square feet and you're not, right? We're pulling truly comparable properties. But I think pricing is incredibly important right now. A lot of people are getting it wrong, and it's causing them to stay on the market for longer than they anticipated. It's causing them to adjust their asking price downward. And as I've mentioned a few times now, we had a show that was done probably a month and a half or so ago, maybe 2 months at this point, where we had a market statistician out of Atlanta look at our specific market. That they've only done it for our company, so no one else really has this information. And our MLS and our realtor board, although they do a great job of providing us with statistics, they don't have these statistics. And what we were really curious to find out was the impact that your initial asking price has on your bottom line, right? So that question that everybody asks themselves, what should I list my house for? The answer to that is going to impact how long it's going to take you to sell your house and how much money you're going to make. And the data was very clear. So you've got, I think in this market right now, as a seller, I don't want this to be like a doom and gloom show. The market's fine. It's just a little more normal now than it has been in years past. And that's not necessarily a bad thing. Of course, everybody that's listening that owns a home wants their home to appreciate double digits year after year after year after year. But sooner or later, everybody's going to be buying $1 million properties. And it's just not sustainable, not with income staying at where it's been, even though it's come up, certainly not in line with how much real estate has cost, right? It's not even, right? The affordability of real estate's not looking great. Our local median income is less than what is required to afford the median priced home in our market. And you can look at it a bunch of different ways, but the reality is real estate for a lot of folks is still unaffordable. That being said, we're, again, at this interesting time in the market where we don't have a ton of inventory. I mean, we're technically still in a seller's market. It's just we're trending toward a normal and sometimes buyer market, depending upon the area. So I think that if you're going to sell your house, you still have an incredible opportunity to bank a ton of money for the equity that you've built over the past several years. But the scenario in listing your home now is not going to be the same scenario it was 3-4 years ago, where if you haven't sold in a week, something's wrong, right? It's taking longer now. It's taking 2 months. It's taking 3 months sometimes to find the right buyer, depending upon your property. But we're still getting multiple offers on our listings. We're still positioning people to sell quickly if that's what they want. You've got folks that want to sell quickly, right? And then you have folks that want the absolute highest amount of money they can get. It doesn't matter how long it takes. That's usually the two ends of the spectrum, right? I need to sell today. I need to sell now. There's a serious reason why I need to sell and get the cash out of my house. Or I'm in zero rush to sell my house. And if I don't sell it, that's okay. And if you get me this number, I'll sell it. But anything below that, I'm just not interested. Well, the people that are in that camp that are like, hey, doesn't matter how long it takes to sell, as long as I get this number, the more time your property spends on the market, realistically, the less that market's going to view your home as being worth, right? Because it's just, people ask the question, right? They get curious. Why hasn't this sold? We see all these other properties that list, that go under contract in a few days. What's up with this one? And it's tough to quantify that, except for the data that I shared about 2 months ago that said that if you miss the mark on pricing your property initially, you're going to take about 11 times as long to sell your property, and you're going to sell it for about 7% less. So, I mean, we have sellers just in the past month that have listed and gotten multiple offers in days. We have properties that are still on the market that we haven't gotten an offer yet on, and they're well priced. That's a tough position for sellers to be in because they see the data. They say, hey, we seem to be priced correctly. Why aren't we getting offers? Well, lower demand. It's just taking a little longer for us to find that buyer. Or maybe we haven't incentivized them enough. Maybe we need to add something to the listing to get their eyes on us. Maybe we offer to pay some closing costs, or maybe we, throw in a little bit of money to buy down their interest rate temporarily. It also depends on whether we're competing with something like new construction or not. I mean, you can go into these new construction communities and let me know if you're interested in that, because I've got a bunch of great contacts, but we maintain a running list of the communities that have incentives on things like interest rates. So like some of these communities, you can go in and you can get a 3.99% interest rate locked, which is crazy. I mean, a lot of people don't even know about that. So if that's something you might be interested in, we can help you with that. But I think in the grand scheme of things, our market, at least right now, is shaky, right? It feels shaky because we don't know exactly what kind of direction we're headed, or we don't know the severity of the direction that we're headed in. I think that it's basically just a normal market right now. It's trending that way. It feels that way. I can say that because I've been in a normal market. I've been selling real estate for 20 years. And I think it comes with an adjustment of expectations about how the market's going to perform. And I think you really take your time to find the agent that's best suited for you. Interview agents. Ask them the tough questions. We've had, this conversation about interviewing agents on this show multiple times over the years. And you can go on YouTube and you can look at all different kinds of topics that I've covered. We've got over 1,000 topics that we've covered on YouTube. So just check us out, the Brian Beatty team. Give us a call, 843-800-0065. That's 843-800-0065. Or check us out online, listingsincharleston.com. So I know I kind of threw a lot at you guys today with what sounds like a real estate market that's suffering a little bit. And I think it's all just a matter of comparison, right? It's a matter of perspective, right? And one of the ways that I explain that to folks is, especially folks that live here, that once you kind of get past Somerville, St. George, on Highway 26, the going speed limit's about 90 miles an hour, right? And if you're not going 90, then you're being passed, and it just, people travel fast on that part of the highway. But what happens if a police officer pulls onto the road and everybody has to slow down and now they're all driving 70 or 68 or whatever? It's going to feel like you're going at a snail's pace, right? When in reality, you're just going the speed limit. You're going the normal speed. That's how this real estate market feels. It just feels like we are at a normal pace, which is okay. It gives buyers some more opportunity to finally get a deal because Lord knows for the past several years, that's not really been a thing. In fact, I remember saying on this program to buyers almost fairly bluntly and directly that, look, you're not going to get a good deal from the seller. There are way too many people moving to this area that are willing to pay at or above the asking price for you to think that you're going to be able to beat up a seller, across the board. Now, of course, there are buyers that tries, and every once in a while, you find that needle in the haystack seller that's willing to give you a really good deal because they're desperate or something's going on in their life or they just don't care. Which, believe it or not, there are sellers that are just like, whatever, just I'm out of here. I don't want to deal with it. And the convenience factor for them means thousands and thousands, tens of thousands of dollars and stuff they don't have to quote unquote deal with. So I think that you've got several people that no matter what are going to want a deal. They don't pay full price for anything, right? We talk to these buyers every once in a while. They're like, hey, it doesn't matter what's going on in the market. I am offering 70 cents on the dollar until I find somebody that's willing to give it to me. There's always going to be those folks out there. But with the change in the market, you're finally starting to see some buyers win, right? They're actually winning against the seller, so to speak. They're not only getting a good deal when they go under contract with the seller, but then they're getting a bunch of repairs made and maybe something else happened along the way that allowed them to negotiate even further. Obviously, from a seller's perspective, that's very annoying. But once you get a seller wrapped up and start packing, you have a little more leeway from a negotiability perspective as a buyer to kind of get what you want. It all depends on how much information you know about the other side, right? That's why this is like a poker match, right? And that's why you have a really good real estate agent. You want somebody that's going to ask the good questions in a creative way to get you the information you can use to formulate a game plan and negotiate with them. I mean, it's really not rocket science, and it's not like I'm, revealing some crazy strategy here. My job is to represent you in your best interests. And if that means asking tough questions or creative questions that I've come up with over the years to get the information I need out of the other party, which we can then use against them in negotiations, I'm pretty sure that's what most people want out of their real estate agents, rather than just a facilitator of a transaction that explains the contract but doesn't advise you, that doesn't take you through a process to have you make the most money possible on that transaction. That's how I like to think about it. I'm not here to save you money. I'm here to make you money. And with my 1,500 transactions and $1 billion in real estate volume, I'm fairly uniquely qualified to do that. So for those of you that reach out to us and that provide us with an opportunity to earn your business, I really appreciate that. And I will say, just kind of like as a closing note, that because of the changes in the market, it is leading to more challenging conversations between buyers and sellers and real estate agents, right? There are going to be some sellers that are stubborn and want their price, and frankly, they're not going to listen to the advice of the real estate agent. You've got real estate agents that don't want to rock the boat in any way, shape, or form. So rather than have a direct conversation that might ruffle that seller's feathers, they're just going to wait for the seller to come to them. They're going to say, hey, you know what? At some point, the seller is going to get frustrated with the fact that they're continuing to show their home, but nobody's buying it, and they'll want to reduce the price. They're literally that afraid that they won't have that conversation with you. And a lot of agents, quite honestly, haven't been in business long enough to even know how to have that conversation because it's been so darn easy to sell listings, right? So that's what I mean when I say this market is changing. You're starting to see more people express frustration out of their relationship with their real estate agent or lack thereof. Communication has always been, when I talk to sellers before COVID, I was really proud of this stat, and then things kind of changed. But before COVID, 60% of the listings that I sold were previously listed by other real estate agents before I came in and rebanded the property and did the marketing the way it should be done, priced it appropriately if it needed to be adjusted, and sold it. Well, obviously then COVID hit, and anytime you put a property in the market, it would basically sell. We had very few properties that we would see expire from the market without selling. So if you're thinking of buying a home, selling a home, investing in real estate, you'd like for us to manage your existing real estate for you, we'd love to speak with you about that. We've got options for everybody. We have a variable commission plan. We can go down to 2.4% on our listing commissions. So for more information on that and all the other incentives that we give us a call or text 843-800-0065. That's 843-800-0065. Check us out online at listingsincharleston.com. That's listingsincharleston.com. And, give us a look on YouTube and reach out to us on our socials, Instagram and TikTok and Facebook and all that fun stuff, right? I have a love-hate relationship with social media. Right now, I kind of hate it. Sometimes I kind of love it. But anyways, neither here or there. I appreciate y'all listening to the show. You guys enjoy your weekend, and thanks for tuning in to WTMA. We'll see you next time.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.